This is your morning brief for Wednesday, March 20th. FedEx is down almost 7% in pre-market trading. They released their quarter after the close yesterday. And as I said yesterday, I would not be buying FedEx, and I would not be buying it even after this pullback. It's just not a good enough return on invested capital business. It's a great name, great global brand. People love the brand. They do good work, but I just think it's too tough a business. You just think about what they're doing. You can take any package, ship it around the world for 30, 40, whatever the price, depending on your size and all that stuff, from one location to anywhere in the world. And it's got to go through, probably in a car or a truck, and then maybe on a ship, maybe on an airplane. And it costs you 20 or 30 bucks. It's really an amazing feat that they can do it at all profitably for that price. But it's very difficult. There's a lot of competition. So I'm going to briefly show you what it looks like in our software here and give you a better idea. So see, the return on capital right now is only 6% return on invested capital. Now it has moved up from 2 to 7, and it looks like it rolled over a little bit. We don't even have the latest quarter. I imagine it's going to roll over a little bit more. You can see the long run history. Returns aren't that great. There's a little bit of an exception here, a few years, but I actually think that's more of a data issue. I don't think it was captured properly. I think it's a 7 to 8% return on invested capital business, which doesn't warrant the price it's trading at, in my opinion. So I think investors got a little bit carried away over the last little while as returns went from 2 to 7, which is nice, nice improvement. But I think the shares just got a little bit too expensive, and I look for better businesses than this, especially at a better price. So I am still not willing to step in on FedEx, and not at this price. Okay, moving on. The next item we have is Northland Power dropped 9% after the chairman sells shares in a bought deal arrangement. Okay, so this is a situation where I would buy the shares. So nothing's really changed. Okay, the company didn't raise any additional capital or didn't really do anything other than the chairman sold some shares, and they were sold in a bought deal led by CIBC. So CIBC took the chairman's shares, paid him for it, a set price, which was about 9% below yesterday's or the previous day's trading price. So shares came down at 9%. Then they try and sell those shares because they got a fee for that. Then they try and sell the shares as quickly as possible. They don't want to, hold them, and if the shares go down, they might even take a loss. So they want to get rid of these shares as fast as possible. And they sold them just above the price they just paid this chairman for. Okay, so there's a whole slew of new shares kind of flooded the market that have to get sold as fast as possible. Okay, now you might be thinking, okay, the chairman sold shares, that's bad, which it's not a bullish sign, but there's lots of reasons to sell shares, right? There's only one reason to buy them, and that's because you think they're going up. But there's lots of reasons to sell shares. Estate planning, diversification, lots of things. He cited estate planning. I'm fine with that. He still owns 12 to 14% of the business. So that's still pretty strong. I would say this is a buying opportunity. You're going to still have the bought deals. There's no way they got through all those shares. So I think they're still going to try and offer them at a lower-ish price. I would be buying Northland. Okay, Micron reports after bell. This is another biggie. So Micron's in semiconductors, in DRAM memory, in your phone, in lots of places. But okay, so we know this is going to be a bad quarter. Okay, and as far as I'm concerned, it's well telegraphed, documented. Everyone should know this. If anyone is surprised by a bad quarter, they're really just not paying attention. Okay, but it's really about the future, which every stock is about the future, of course. But I'd say this more than most. Like, this is, to me, is like a throwaway quarter. I hope they throw everything in there, including the kitchen sink. If there's any bad news, any write-offs, just get it all done, and then we'll move on to the next cycle. I'd be a buyer at almost any price after the release. Going into the release, there could be, they could disappoint, and they could be worse than we thought, or it could be better. I think there could be a wild swing today when they report it. Well, it won't be until after the bell, so it'll be in after hours. But it's really about the next cycle, and I'm sure they'll talk about that, and everyone knows that, of course, but still, some people get spooked if the numbers are really, really bad, but they're not going to be great. All right, so that'll be a really fascinating one, I think. Okay, the Fed wraps up their 2-day policy meetings with an interest rate announcement at 2 p.m. That's kind of the time they always do the interest rate announcement. I don't know why we need to have 2 days of meetings. They just hum and haw and say, oh, we'll be data driven. I mean, it's repetitive. It's, as far as I'm concerned, it's just too much. It used to just be 1 hour meeting, like once a quarter even, and now they drag it out, and all in the name of transparency, which, I'm not going to argue transparency is good, but I mean, there is just a lot of fluff in these meetings, and too many people pay way too much attention. They're going to change it. Probably won't change it this time, but whenever they do, it's a quarter point, and the market reacts, and then 2 days later, everybody forgets about it, because like, which one company is changed? Would you change your thesis on a company because the Fed interest rate is a quarter point different? I never knew. Anyhow, of course, rising interest rates aren't great for the stock market, but let's not hang on every word. Futures are flat ahead of the policy statement. That's kind of what the rhetoric is out there. I mean, they're flat. I don't know if it's because the Fed policy statement, they're waiting for the Fed policy statement. It's a possible explanation, but I think the media likes to give you some sort of cause and effect. Oh, it's flat, so it must be because everyone's waiting for the Fed. That's not necessarily true. They're flat. They've been up and down, and they've been up for a few days, and maybe it's just time to take a break. There could be lots of other explanations. But anyways, it's flat. Policy meeting at 2. There is always a reaction when they announce it. So watch at 2 p.m. That's your morning brief for March 20th. Let's find some gems.